In this episode, I interview a dividend investor. We talk about how to get started with investing, how to select dividend stocks, and how to go about investing with a spouse so that you're both on the same page. Hi, my name is Kanwal Sarai, and welcome to the Simply Investing Dividend Podcast. My guest today is Jermaine McDonald, CEO of Learn, Grow, Invest. Based out of Jamaica, their mission is to be a leader and trusted source of information for financial and investor education in the Caribbean and around the world. Jermaine is also a passionate dividend investor, and we have lots to talk about when it comes to dividends. You'll find today's episode both educational and inspiring. Jermaine, welcome to the Simply Investing Dividend Podcast.
Thank you for having me. I've been a fan for a long time.
Well, you're very welcome. We're so honored to have you on our podcast today. We are going to talk about dividends. We're going to talk about investing. We're going to talk about a lot of the great work that you are doing in Jamaica. And you also have some experience with stocks in the US. We were talking before I hit the record button. Your audience is all over the world, right? You've got so many expats that are living outside of Jamaica and that you help coach and get them started with investing. Okay, so I'm going to start with my very first question, and I can see it on the t-shirt that you're wearing. It says, Learn, Grow, Invest, and that's also the name of your website. Why did you choose that name?
So it took a while to get to this name, but when I started to learn about investing in 2016, I never knew what I was doing. And so I reached out to some friends and we started a WhatsApp group with just about 7 of us. And as I started to learn, I wanted to share that knowledge with others because I was like, how come nobody has ever told me about this wonderful thing called investing, right? This is how the wealthy stay wealthy, right? And so I started to host meetings each month to teach people how to invest. And when we got to maybe 2019, 2020, I wanted to have a name because I figured at some point now, persons will want something to call us, right? Because we've been having monthly meetings, we've been doing this, and we had some other names before, but I didn't think it really captured our ethos, right? Or what we were really about. And I remember writing down a list of names, just going through, and close to the end of that list, I wrote the name Learn, Grow, Invest. And I was like, that sounds interesting because the idea of just this mindset, this perspective of always learning, that was something that's a big thing for me. And I know that sometimes you can learn and not necessarily apply that knowledge. There are a lot of smart people who are, for example, still not good with their money. So you have to kind of grow at some point by just applying that knowledge. And then, of course, we wanted to just send a message that investing should be just this lifelong journey, right? So Learn, Grow, Invest is that's the idea behind it. So I'm always going to be investing for the rest of my life. My children will be investing. My family should be investing. And so it's just when you hear the name, you should have a pretty good idea of what we do. And somebody was saying to me recently that maybe I should change around the name to Learn, Invest, Grow, because they're saying that growth is the goal. And so they completely just kind of threw my mind into a loop because I'm like, should I change the name? But I'm like, no, Learn, Grow, Invest is who we are. And that's what we've been known for now for 4 years.
Okay, I love the name. I think it's fantastic. To me, when I hear it and I see it, it's almost like it's the steps you have to take. So you got to start with education first, which is learning. And that's how I got started with investing. I had no knowledge, no education, and I made some lousy investments. But your background, do you have a background in finance or investing or accounting?
Absolutely not. So like you, and I remember years ago when I was trying to learn about investing, I found channels like yours and I just tried to soak up as much knowledge as I could about investing. It's all self-taught. And as you know, once you lean into something, pull from many sources, you'll probably learn more than those who went to school for it. And that's because you learn a syllabus in school, you take a test, then you go and do it for a living. It doesn't mean that you continue learning. And so those who are in the field don't always invest in the type of learning that will cause them to continue to grow. And so I've been learning about investing for the past 7 years because I've had to teach people every single month with every single video. And so I started in IT though. I started selling computers, repairing computers back when I was 16 in high school. And so this company now, Learn, Grow, Invest, was not something I had planned, but I do have a joy for teaching. I do like to help others. And so I think it's a natural part of who I am.
Yeah, that's incredible. I have the same background as in IT. I did computer science, spent many, many years, decades now, working for software companies, enterprise software. And I think I share the same values as you do. I enjoy teaching, and especially when it comes to investing, so passionate about helping others. Now, the feedback I get from some people, the first reaction normally when you talk about investing, and in my case, dividend investing, it's like, well, oh, it's so complicated. I
Yes.
can't do this. This is so complicated. Do you think investing is complicated?
So, I've come a long way in even learning the best way to teach people how to invest. And I do understand why they see it as complex, right? Because it's locked behind these, complex financial terms, and it's done by people who sound a certain way, or it may be spoken about. Even if you look at like Bloomberg or Yahoo Finance, they're using terms that the average person will not know,
Mm.
though you have everyday terms that could substitute for it. So what I say to persons is that investing, think of it, so there's a reason why there's a leaf in our logo when you look at it, and we say investing is like planting a seed. So when you plant
I
that
like that.
seed, that becomes a tree. So we say to them that the tree growing is capital appreciation.
Mm.
The fruit from the tree is dividends, right? So you can get fruit from the tree and you still own the tree, you still have the tree. And so that's how we use to explain investing. And usually when we do that, it's a little bit easier to understand. And I say to persons, if you go outside every day, you look outside, you see your tree, that's your investment portfolio. It's still there, right? Through the different seasons. So some seasons, if there's a hurricane, you may not get any fruit because of something that happened. If there's a certain part that's damaged, the tree may wither, but it's still standing, and maybe you can prune it and it will, regrow. But I find that such a simple example because we all investing something. We just don't necessarily understand that that's what we're doing.
I love the analogy of the tree. That is incredible, right? The tree is your capital appreciation, and the fruits are the dividends. I'm going to use that in a future episode as well.
No problem. No problem.
That is incredible. So, and if people who have heard previous episodes of the podcast will know that I tell people it's not rocket science. And to prove it, I had both of my kids when they were 9 years old understand dividend investing, right? So they started investing their money that they got from their grandparents on their birthday, started as little as $300 with a couple of shares in a bank stock here in Canada, and then it just grew from there, right? So now that they're 21 and 17, they've been
That's a long
investing
time.
for many, many years.
Yeah.
So if a 9-year-old could figure out how to learn about investing, I think anybody can do it. And the other thing you touched on is the financial jargon that the industry likes to use. And that just
Yeah.
confuses people, right?
Yeah.
So I prefer let's just keep it simple and
Yeah.
keep the jargon out of it. So now let's move on to, I know you're passionate about dividends just as I am. What
Yes.
made you interested in dividends and dividend stocks?
So when I realized that, so when I first started to invest, and I invested in my first IPO. I made some money. I was like, okay, cool. Let me just put everything I have on the next investment.
Hmm.
And then I made some money. I was like, okay, cool. Let me do this one more time. And then I started to lose money. And so I was like, that's maybe I should really understand what I'm doing, because at the time I was taking the advice of my financial advisor. And so, they would just say, buy this company. And when they're presenting an IPO, they'll present it like the best thing since sliced bread. And you understand how the industry works later, and you understand that every single IPO is going to be marketed whether or not the company is solid or not, right? Because there's a broker whose job it is to help their client, the company, raise capital. And so it's not necessarily that that every single investment is good for you. And so when I started to lose money and lose real money, I started to look at different ways to invest, right? So of course you cannot research investing and not find persons like Warren Buffett, not find other persons who are well known in the space. And so I started to look at this idea of dividends, right? And so I understood very early that there are persons who are able to make a living just from the dividend checks that they were getting. And so I did the math. I said, okay, I'm earning a certain amount now. And I said to myself, okay, how much do I need to earn that in 20 years, when I'm 60, I can retire and live off my dividends? And that was a really big number, right? Because as you realize, if you're getting 3%, 5%, 6% dividend yield, then you need that volume in order to get money that you can actually live with, right? And so, I started to say, okay, well, if I'm gonna invest, I want to invest by investing in volume, which allows me to get a larger cash. And then when I'm getting my dividends now, it will be sizable, and then I can reinvest it. But even if I choose not to reinvest in that moment, the cash can actually do something. And I say that because you probably see this with your students as well. Sometimes they'll start investing, they may buy 5 shares or 10 shares. So when they get their dividends, it's maybe like $10 or $20.
Yeah.
And they're sometimes often discouraged with that. And I'll say to people, well, you get the same percentage as Warren Buffett, but he has 1 billion shares.
Mm.
And so when he gets 10 cents per share, he's still getting a good size check that he
Yeah.
can do something with. So if you're going to invest in dividends, invest in volume. And so for me, I saw where dividend investing ultimately is what I would want to do, because I don't necessarily want to be tracking my portfolio every day. I don't want to have to be looking at the markets every day. So that's a part of the name Learn, Grow, Invest, because eventually you want to not have to manage your investments every day. So just like the tree will need your help at the start for you to water it, for you to provide shelter. But now for my mango tree that's been there since, maybe the 80s or the 90s, I don't need to do anything for that tree anymore. But it's the same for our investments. And so dividends was just really attractive. It made a lot of sense. And it's, to me, the real sweet spot of investing, where you can do it passively
Mm.
once the company is solid. And what I'll say to my students is that you should still review the report for every investment that you have, but you don't need to do it every week. You'd want to do it quarterly when the reports come out. So like the 10K and 10Q, I think we
Mhm.
call it. You want to review those because you have your money in the company. You want to see how they're doing, but you're not going to overreact if profits are down 5% or 10%, once you understand why. And so you can continue to add to your position, because in the short term, bad news is actually a good thing. That means the price will go down. You can
Yeah.
own more shares. And then 20 years from now, 30 years from now, when you have 1 million shares or 10 million shares, your dividend checks will be so much that you can now live off of that. It can, completely replace your salary. And then that's when you'll see the power of investing.
Yeah, and it is truly, you touched on this, it's truly passive income because
Yeah.
once you own the shares, you're not having to do any more work. You just have
Yeah.
to hold on to the shares and the
The work
dividend.
is just reading after that.
That's right. Absolutely. And then the other thing with quick example with, for example, Coca-Cola in the US, right? I think they've had either it's 52 or 53 years of consecutive dividend increases. So now not only are you getting the dividends for the shares you own,
Yeah.
but the dividends are going up every year. And every time that goes up, that's more money in your pocket.
And that's such a simple company to understand. Every single person in the world should understand what that company does. You see them every time you go to the movies, you're in the supermarket, you see them, you're watching sports on TV, you see their ads. It's a very simple company to understand.
Yeah. And I think the key is just to keep it simple. Don't
Yeah.
complicate it. And you should understand, have a general idea of what the business is. If you don't,
If it's
yeah, go
if
ahead.
it's too complex, then chances are only a limited amount of people can make money, right? So I find that even when you look at things like cryptocurrency, and I've nothing against it. I have a crypto portfolio as well. For the
Mm-hmm.
most part, people do not understand it, right?
Yeah.
And that's why only a certain amount of people truly actually make money from it, because the majority of people, they're not really sure what they're investing in. They've just heard that they should invest.
Mm-hmm.
And so if you're buying into something and you're not sure why, then you won't know when to sell, you won't know when to hold, and you certainly won't be confident enough to keep buying more, right? Because that part, I think, so for all the content I consume about investing, I don't see a lot of talk about buying more. We tell people to invest, and so they'll buy some shares, but the wealth is not in owning 5 shares or 10 shares. Even if you owned Amazon shares a few years ago before the split, if you owned 5 shares, you're still not wealthy. But if you bought 5 shares and every month you buy one, and every month you're buying one and one and one, over 10 years, over 20 years, you have now a sizable amount, right? Because I think that's where the wealth is, right? Look at all the wealthy people you know, they own millions or billions of shares. And so it's really not a complex thing, but of course, sometimes it can be shrouded or just kind of meant to be complicated because then you can control who makes money.
Yeah, absolutely. Now, what are some of the things you look for in a stock when you're evaluating it? If you want to share with our audience some tips or some things that you look, key things that you look for before you decide to invest in a stock.
So the very first thing I'm looking for, and this has to be true for everything, is that I want to understand how they make money,
Hmm.
right? Because if I understand how they make money, I can know all the ways in which they make money. I can know all the things that impact how they make money.
Hmm.
And so that will help me to understand again when to buy, when to sell, when to hold. So it all starts there. I'm not going to invest in a company I don't understand, even if it's making money, even if it's up 100, 200, 300%. I've learned not to invest in what I don't understand because, again, there's going to be a point where you have to make a choice. And if I don't know how to make the choice, because if the choice is based on the stock price, you're very likely going to be wrong because we've all sold stocks too early and we've all kept stocks too long. And that's usually because we don't understand the company, right?
Mhm.
So it starts there. And next, you want to understand the vision of the company. What I mean by that is you want to know where the company is headed,
Hmm.
right? Is the company in a sector that's going to do well? Is a company in an industry that is positioned to do well? Is it an industry that makes a lot of money, but there's no growth, right? If there's no growth in the industry, there's likely not going to be any growth in your share value or in the dividends that you get.
Hmm.
So the industry is going to be important. And then next, you want to understand now all the things that impact that company's ability to achieve their vision and their ability to remain competitive, right? There's hardly any monopolies that we invest in because usually if it's a monopoly, they don't need your capital. So you're not gonna invest in a monopoly really. There'll be some competition. Right now, there are companies who are market leaders, they've been doing it for a long time. But if you look at the pockets that they operate in, there may be competition in different segments that they operate in, right? And so you want to understand what impacts those. And what I mean by that is in Jamaica, we have a company that manufactures cement. Cement is a big part of how we build our houses. We use it for so houses in the Caribbean are made with cement, right? But we also know that in the Caribbean, we have a very active hurricane season. So at least for a month or two each year, that cement manufacturer may be impacted as to how much cement they can create because of the weather.
Hmm.
So because I understand that, I know that for at least one quarter every year, they're going to be maybe scaling down operations for maintaining their equipment. And two, they may have an issue where if we have like 4 or 5 hurricanes in our hurricane season, that's going to significantly impact their revenues. Because not just for them being able to make cement, but you're not going to be building on or adding on to your house if it's raining outside. That's not work you're going to do. And so that basic understanding of that product, what impacts it, will help me to understand whether or not I should invest. So that I've actually brought it down to the 3 C's. So I say you want to know the company, you want to know the climate that they operate in, and you want to know, sorry, company climate. Oh my gosh, the last C is alluding, but the same things that I said there,
Yeah.
it's really about just understanding the company, right? And then only then when it passes those 3 tests, then I'll look at the financials. Then I'll look at the reports. Then I'll look at the price. All right. But if it doesn't check those first few boxes, I'm not going to look any further because it's likely not going to be something that I want to own at all. Right.
Okay, yeah, that makes sense. Do you also look at a company's track record? Like, do you go back 2 years, 5 years, 10?
Well, I'll do that in phase two. So phase two for me is when I'm looking at the financials, I'm looking at the history, etc. I'll usually go back 5 years and not much more than that because things change so much, especially for the sectors that I know. In tech, 5 years is like 50 years for any other industry.
Yeah.
So I look 5 years because you'll see most trends by that time now. If a company has been around 20, 30 years, that's great to know. But they're typically going to be in blue chip status if they're around 20, 30 years, right? So blue chip status means I'm likely going to get a consistent dividend. I'm likely going to know what that company is about. You likely probably grow up hearing about that company. And so again, I'm not going to need to really look past 5 years, but I mean, I'll take all the data that I can get. And so it's if you have the opportunity to get access to it and it's there, I mean, you should certainly use it in your analysis.
Yeah. Oh, yeah, that's great. Because that'll give you some kind of indication when you look at the past of how,
Exactly.
nobody can predict the future, but at least some sort of confidence of how the company is going to perform and whether or not they're going to pay you a dividend. So I know
or whether or not, sorry, I'll just add. So what we're talking about before, where you want to know where the company is headed, when you see their foundation, which is their history, you know whether or not they can take advantage of opportunities in the future. So, I mean, if you look at Nvidia and how well they're doing, Nvidia has been around for a long time, and they would have had to have a foundation or at least the capacity to leverage the opportunities that are in front of them now. It's not like they just started last year and then they're this amazing company. They've been there for a while, and so they've been able to build that foundation. They've been, I mean, I used to be in IT and gaming and that stuff, so I've known Nvidia for a long time, and so it's not hard to see them get to where they are now. Of course, a lot of that you must know has to do with one of the things that makes people not understanding investing is this idea that people think like real estate. You go to buy a property for $10 million now, you go next week, it's still valued 10 million. With stocks, you buy it for
Mm.
$10 now, it may be $30 next week. And a lot of that can be just the sentiment that investors have for that company, which kind of goes against the fundamental analysis of a company, because
Mm.
fundamental analysis means that you can arrive at fair value. And with the stock market, one of the good, but also the interesting parts about it is that there's this there's this part of it that you can't quantify, and that is sentiment, which
Mm.
drives a lot of what we do because we're human beings. We're not robots investing. And so if I really like this company, then I'm going to be willing to pay more than what is really valued. But if you think about it, that's not so strange, because if you really like this house that you've seen, you're willing to offer more than the market price. If you really like this watch, you're willing to pay maybe a little bit more than the average price for a watch to get it. But sometimes it's hard to wrap our minds around that for stocks.
Yeah, it can almost be. Sometimes I find it's a little bit of an art as opposed to science.
Yes,
Because of the
exactly,
sentiment. You
exactly.
can't quantify it. There's no mathematical formula
Yep,
for quantifying sentiment of how people feel about a stock.
yeah.
So that can make it challenging, especially if you're new to investing. So, what do you say to people who are actually afraid to start investing? They think, if you watch the news, it's always bad news. There's always the
Yeah.
we're going to have a recession is coming up. Interest rates are going to go even higher. There's more unemployment, and everything costs twice as more now. And so people read that and they get scared, and they
Yeah.
say, you know what, I'm not going to invest anything because I don't want to lose my money. So what do
Yeah.
you say to people like that?
So I deal with that question so much you wouldn't believe. So I say to people that with with education, risk is minimized. So I try to help people to understand that there is no risk-free investment. And if anybody comes to you with something that's risk-free, it's probably a scam. It's probably something that is not real about it, right? So there is some risk. Now you minimize the risk through education, and that's what we're here for. So you and I will teach people the basics of what they need to know. We're not offering guarantees, but we're saying this is how you understand what you're doing. Now, I say to persons, there's a risk in driving. We hear about car accidents every day, but you go in your car and you go to work driving while understanding the risks that you very may well be in a situation where you might, meet in a minor accident. Hopefully it's nothing serious, but an accident also doesn't stop you from driving. Same thing for airplanes. We hear about these devastating crashes all the time. We still go on an airplane because we trust that once we're in that airplane, somebody has checked the safety guidelines, somebody has put all the measures in place. And so, I mean, and if you're a new flyer, well, I'm not a new flyer anymore, but the first time I went into an airplane, I was like, are you sure? Because I watched these movies now and I saw where, they either hijacked the plane or something else. But you understand that there's risk in everything. Risk is minimized through education. And the scary part is if you don't invest. Because when you understand how money works, when you understand, interest rates, inflation, you just simply need to look at your savings and look at how much you've been spending. Look at the fact that your salary probably has not increased in a long time. And you'll start to see the signs that investing is the way to go, because again, if you look at those, even if you don't look at the wealthiest in the world, for persons who are even a step below, majority of them is either they've started their own business and have created millionaires and billionaires through people investing in those companies, or they're simply investors who, put some money down, they took some risk, and they were willing to, hold out, wait for it long term, and then it was able to grow into something meaningful, right? So even companies like Microsoft or Apple, they've made a lot of millionaires and billionaires. Most of those persons have been holding from the 80s, 90s, and
Yes.
so on. Because if you think about it, the wealthiest persons who are investors are investing for more than 10, 20, 30 years. Not saying you can't do well in the short term, but you really want to think about it long term. So again, risk is going to be minimized the longer you're invested, right? So the chart will look like this. And if you look at it, if you buy now and you check it next week, you're going to feel scared. But if you step back, you look that it's up 20% in the last 2 years or 3 years. And if you go back 5 years, 10 years, maybe it's up 100%. You'll see that the chart gets smoother the farther you zoom out. Then you start to understand that and it's your parent. So it's just like raising kids. If you overreact to something that they do now, you'll feel like, man, I'm the worst parent in the world, or I'm not getting this right.
Yeah.
When you step back and say, well, they've been, my children for 20 years now. So I'm not the best parent in the world, but I'm not the worst parent in the world. And now they're good kids because I just continued to do the right things, and, over time, everything will be fine.
Yeah, that is so important, right? Is having a long-term perspective.
Yeah.
And I like what you said. And if you zoom back from the graph, right, day to day, stock prices go up and down all the time, all the
Yeah.
time. But you step back 10 years, 15 years, and what we start to see is a trend where the market does this.
Exactly.
And that, I think, will give people some confidence into start investing today. And I think you touched on it briefly, because if you don't do anything and you just keep your money in a bank account, in a
You're
savings account,
losing money.
you're going to be losing money, right? Just because of inflation, your money's going to be worth less and less every year just by keeping it in a bank account. So,
And I also use the example because we actually base a lot of our investment decisions on the Bible. And if you think about the parable of the talents, if you may not know it, but in that parable, there was one person who didn't do anything with their talent. They hid it. And because they hid it, they were actually scolded for it, right? Because the parable says at the very least you should have taken it to the bank so that you could get interest. Of course, interest rates are not what they once were. So we substitute that now for the very least that you could do is take that money to an investment firm, get some dividend stocks or get some good stocks, and then at least you could be getting something to combat inflation from that capital.
yeah, absolutely. And so you've got a lot of experience. You've been doing this for many years. What advice would you give to the young folks that are out there that are just starting a new job? Maybe they're only 2, 3 years into a full-time job. What advice, when it comes to investing, what kind of advice would you give them?
So the first thing I say to persons is that I started investing late. And by
Yeah.
late, I started investing at the age of 33. Right. So I'm 40 years old now, so I've been doing it now for 7 years. So the first thing I'll say to them is that if you start now when you're 19, 20, 21, you're way ahead of the curve, right? Because most people start later in life. So when you start this early, you have the opportunity to not have to spend large sums of money. You can just invest consistently.
Yep.
And I know that it feels like a lot having to balance this new job, and you have all these things you want to buy, because when you get your first job, you're thinking about all the things you wanted to buy as a kid that your parents never allowed you to buy. So you want to buy all the toys and all the games and all the stuff like that, but you just want to invest consistently, right? So we recommend that you invest at least 10% of your income. Now, if you can do more, that's great. But just invest along with all the other things you want to do. And what you're doing is thinking. So you may not have a family yet. You may not be thinking about marriage. You may not be thinking about traveling. But what you want to do is those are the kind of things that you want to plan for, even though it's not on your radar yet. And what I mean by that is just in case when you get to your 30s and your 40s, you want to travel the world, you've already been investing for 10, 20 years. And you and I know that one of the hardest things for adults to do is when we're in a job, we want to leave, but we look at our bank account or we look at all these bills that we have to pay and we're like, I can't leave because I have responsibilities. And so when you're younger, you actually have fewer or little or no responsibilities. So you can invest more than we can, right? Because I have to think about my mortgage, I have to think about my wife, I have to think about our son before I invest, right? And so since those are my realities, I would invest differently from somebody who's younger. But for the persons who are young or at the very least just starting, just think about building the habit of investing. It's not even necessarily the amount because as you learn, as your confidence grows, as your conviction grows, you will make room for more, right? When I just learned about investing, my wife actually had to stop me. She's like, can we save some money so that we can live? Because I was taking all of our available cash and putting it into our investment account because I saw the potential. And she was like, that's nice. That's good. But we're not going anywhere. We're not enjoying life. And that's the balance that we try to strike with our families because we know the power of investing, we want to invest maybe all of our available cash. But our wives, they want to go to dinner, they want to go to the movies, they want to go and do all of these nice things, which cost money. So you understand opportunity cost and you say, well, it's more important that I invest a little bit over time than try to do everything now. So again, think about the concept of seed. You plant that seed when you're 19, 20, 21, and when you're 40, 45, 50, that's going to be a big tree. That's going to be a tree that has a lot of fruit and a tree that is going to be battle tested. And so it's going to give you great returns when you're that age. We don't know what companies are going to be around 20 years from now, what the state of the economy will be, but those aren't decisions that you need to make overnight. And you'll be able to see trends happening, right? A company is not going to be $1 billion company and then close down tomorrow. Even if there's something major, it may impact their profitability, but usually the larger companies are resilient. It's the smaller ones that are more risky that you may see them today and they're gone tomorrow. But those that are solid companies, the companies that you grew up hearing about, chances are your children will hear about those same companies.
Yeah. Hopefully they're going to be around for a long
Yeah.
time, right? So I want to reiterate what you said before when in terms of advice to the young folks is the earlier you start, the better off you're going to be, right?
Yeah.
And I was close to 30. I was around 28 when I started, and I wish I had started
So
10
you
years.
started 5 years before I did.
I wish I started 10 years earlier, right?
Yeah.
I've been doing this for 24 years now as a dividend investor, but I do wish I started sooner because what we talked about before, dividends are coming in. If it's a good company, they're going to be increasing the dividend every year. If you can take those dividends and reinvest them into other dividend stocks, you're going to see your portfolio grow and your dividend increases are going to grow as well. I had just a quick note. I had a Dividend John as an interview I did many episodes back, and at the time he said he was earning around, I think it was $64,000 a year in dividend income, and I just looked at his.
Just imagine the size of his portfolio.
That's right. That's right. And he started really young. And I just saw one of his, I still follow him on Twitter. And about a month ago, I saw his tweets. And I think he said he exceeded $70,000 now in dividend income.
That's enough. That's what most people, well, not even most people.
Yeah.
There are persons who earn that in a year. But I think the median salary maybe somewhere about 30 to 40,000, maybe 50,000 US. I'm not sure. But that's enough to take care of your family. That's enough to travel. That's enough to live a reasonably comfortable life with just that income. So he doesn't have to do much to live comfortable for the rest of his life.
Absolutely. And it gives you options, right? I mean, if you love your job and you want to keep doing your job, that's fine. You may want to do it part-time. later on in life,
Exactly.
right?
Yeah.
And it gives you options, like you said, to travel and to learn, to do different things. So I
It's
was,
good to have a job you love, but we all don't want to work for the rest of our lives. And what I mean by that is it's I think we were created to work, meaning work is a good thing. It's good to be productive. But there are seasons when we don't want to work the same way or work as hard or work 10 to 12-hour days because we also have families and other things which pull on our strength and our energy. So
yeah.
the more you invest, the more chances you get older.
Yeah, absolutely. And then I noticed on your website you also do couple consultations, right? When it comes to
Yes.
investing. So, what is the most common um, issue or conflict that you see between couples when it
Oh
comes to
my gosh.
investing?
So yeah, so my wife and I we started it's a very brief story. When we were married 5 years in, our marriage was under a lot of pressure. We were on the brink of divorce and a lot of those challenges related to money. And it was actually shown in multiple surveys that we saw where finances would account for maybe more than 50% of divorces. And so when we recommitted to ourselves and our marriage, we wanted to really get a handle on the finances, right? We weren't managing it together, so we started to do that. We started to come up with, we started to budget together. We started to agree on how to spend money. And so naturally, because we're both teachers, we actually felt, I think, called to helping other couples navigate those things, right? Because it's really we've seen couples where the wife doesn't talk to the husband about the money, the husband feels all this pressure to provide, so he may, do some things that he doesn't necessarily want to do, but he's yeah, afraid to talk to his wife. And so there's all this challenge that we see with couples and managing their money. And, we wanted to help with that. Now, I'll tell you, we started a YouTube channel for couples, and we found that couples don't like talking about money. It's they'll talk about everything else and they don't necessarily want to dig into that. So we thought, let's make ourselves available. It's not a service that we provide as often as I think is needed. And what I mean by that is usually the wife will come to us, usually the husband will come to us, and we'll work with them separately and then they go back. And then maybe over time they'll, pull the other in. But we find that usually when we do counseling, because we are premarital counselors, so we help persons prepare for marriage. And so we just find that it's a service that's there. It's a service that couples can leverage if they need it. But we find that usually we're working on the individuals and eventually we'll work with the couple. But what we do once we're working with them, that first session together, we're just letting everything out, right? You're going to tell me what you're doing with money. Your partner is going to say what they're doing with money. We're going to try and work through a budget together to see where exactly, because sometimes you think you're doing one thing, but the budget says otherwise. And then from there, we can set some goals as to what you want to do, right? Do you want to clear debts? Do you want to learn how to invest? Do you want to start a company together? Usually the goals will determine the additional sessions and what we do. But the simple act of doing a budget together, of tracking all of your accounts and debt and credit cards in one place, will help you to just navigate those financial conversations a lot better. And it will actually lead to, in most cases, a happier marriage just because that area is no longer a source of conflict because you're able to spend freely and spend in a way that you both enjoy, right? Because men and women spend in different ways on different things. And sometimes we kind of have some resentment for how the other will spend, right? So my wife will spend on the smaller things. I will spend on tech because I'm a guy who spends on tech. So I'm spending $1,000 at a time. She's spending $50, $100. I used to look at her and say, "You're wasting money." she would look at me and say, well, maybe you're wasting money spending $1,500 on a camera when we don't necessarily need to do that. And so if we understand that these are just us showing what we value by what we're spending on, we understand there's nothing wrong with it once we have enough savings, once we know where our money is going, then we can now do those things freely without having to worry about it causing an issue.
Yeah, no, this is so important. What do you tell couples when one of them has a higher risk tolerance than the other one? So when it comes to investing, there's such a discrepancy here, right? So what do you tell? How do you get them to work together?
We tell them to find the middle ground,
Okay.
right? Because if it's not safe to take on all high risk investments all the time, it's not safe to put all of your money in investments and nothing else.
Yeah.
And so the middle ground would be, if I am completely conservative and my wife is very, very aggressive, we can find some moderate investments. And then I can have now a smaller allocation of the portfolio, something that's high risk or something that she would enjoy, because maybe she likes cryptocurrencies that are high risk. So maybe that's 5%, 10% of our portfolio and not 80%. Because as you know, it can be really great this week, and then next week we're wondering if we need to sell our house to be able to, catch up. And so it's not that we need to stop being who we are. We just need to now understand that marriage is a partnership. And so that partnership means that there's some compromise, there's some middle ground. Compromise is not a bad word. It usually means that we find the best position that we can both agree on.
Yeah, no, that makes perfect sense. I think that's a very good approach to make sure that at the end of the day, everybody's on the same page.
Yeah.
Because I think that's where a lot of
that's the most important part. That's the most important part. You don't want to be operating with money in a way that your partner does not know. You don't want to have accounts that you're investing and saving and you're losing money and you're afraid to tell your partner, right? I made a real big mistake with an investment once. I think I sold it too early. Well, at the time I thought I sold early. I was actually right to sell at that time, but I was feeling very bad about it. I told my wife and she said, it's fine. I know you're going to make the money back. It's completely fine. And I took a major loss on an investment, about 40% loss. It was a big chunk of our portfolio. And because she gave me that confidence to continue, what I ended up investing in went up 500% in the next 18 months. So I was able to, in fact, make back the money that we lost and then some. Right. But if I hid that from her, I wouldn't have gotten the chance to get that good, affirmation from her to continue to, find the right investment.
Yeah. Yeah. That's, thank you for sharing the story. That's incredible. And it's nice to have that confidence and support. That's the big thing, is having the support. Yeah. Okay. So I'm going to be respectful of your time, because you and I could probably chat about this for another hour. So I got one more question and then we'll wrap it up. And I was looking at your website. You have some great charitable initiatives, which I think is incredible, helping others. Can you tell our audience just a little bit about what they are and why you started it?
Sure. So we wanted to, because we have this saying that you probably have heard of as well, that, persons will always say, I wish they taught me about money in school. And so what we want to do is say, well, it's not, we want to play our part in that. So because there's not a national financial literacy or education drive that we have here in Jamaica. So what we do, and if you understand the concept of a tithe, what we do is tithe our time. So we give back to churches, to schools, to nonprofits, anywhere in the world, right? So if somebody in the US or Canada wants us to do a presentation on money, we'll do it for free if you're a school or a church. And what we do is we go physically if we're able to. We'll spend 45 minutes or an hour teaching them about money. And what we want to do is, over years, again, we're planting seeds here. And what we're hoping is that 5 years from now, 10 years from now, 20 years from now, more people will be comfortable talking about money. More children will go home and ask their parents about money because they would have learned it from us. And now we're in the situation where if more people know about money, if more people know about investing, then we will actually hold the companies responsible. The companies who we invest in, the banks where we place our money, this whole financials, structure that we're so reliant on. If we know better, then they'll have to serve us better, right? If we know that this 20% interest rate you're charging me is not competitive because I'm going to be spending so much in interest payments, and I don't go for that option, it can save me the best income earning years of my life, not having to repay debt. Those are a simple thing we saw. For example, banks in our country are making billions of dollars. If you understand how banks make money, then you understand that that's not necessarily a good thing. Because if you're getting 0% interest on your savings, and yet banks are making billions of dollars, that means they're making money from giving debt, right? And that debt, we're the ones repaying that interest. So if you understand basic things like that, then we believe that we can enable more people to be financially free. We may not be the one to walk with them the whole way, but that's why we create content as well. And what I was driven by is I wanted to leave videos that my son, when he grows up, he can watch about money, about investing, about stewardship. And for as long as we can, we'll present to as many schools, as many churches, as many nonprofits as we can. And the hope is that one day we'll get to a point where there's so many people doing it, there's so many people talking about it, that it will just become the norm. And so, that's why we do it. It does take a lot of resources, meaning, from time to time we try to raise money. From time to time we try to, because as you know, even though it's free to present, the cost is time, the cost is resources, the cost is gas, the cost is time spent, so we're hoping that we will continue to have enough support and resources and capital ourselves to continue to do this. But also the hope is that once more people get involved, because there are very few persons in the finance space here in Jamaica or even the Caribbean. And so even for us and our financial advice, we rely a lot on the US, and some of the advice may not be nuanced enough to match our realities here. So there are principles that you can certainly take, but our hope is to see, maybe more than half of the Caribbean investing, right? We're nowhere near that right now. So we have 3 million people in Jamaica and maybe 30,000 investment accounts. So you do that math and you'll see that we have a long way to go, but
yeah.
We're just, thinking, planting seeds, and then over time these seeds will grow, and then we'll be able to look back and say, well, would have reached, thousands, hopefully millions of people by the time we're.
Yeah, that's incredible to hear. That is fantastic. The initiatives that you're putting forward, and you're giving back to the community, and you are planting seeds, like you said, with the younger generation, and to get them to a point where they can learn, grow, and invest, and also achieve financial freedom. Right? That's what you're promoting eventually, is for everyone to get to that point. So that is incredible. Jermaine, where can people learn more about you? Our website, YouTube channel, where can they get in touch with you?
So they can just search for Learn, Grow, Invest. We're on all platforms. We're not as active on all platforms, but you can certainly find us there. We're primarily on YouTube, and that's because it's the best platform for timeless content. And what I mean by that is you can find videos that are 5 years old, 10 years old, etc. But you can certainly reach out to us via email, DM. Learn, Grow, Invest Club is our website, and we're open to any opportunities to collaborate, or persons who, if they have questions. If you reach out to us for something that we don't understand, we'll point you to somebody who we think can help you. and we just really want to say more meaningful education out there. Meaning, as you know, there are some questionable sources for content, and so we need more persons like yourself doing content to help to educate people in a way that it's more practical, it's more meaningful, it's something that as you grow, your audience will grow, and it's the same on our side as well.
Yeah, okay, that's great. We will put the links below in the description in the video to the sites that Jermaine has mentioned. So if anybody wants to get in touch with him, please do so. Jermaine, I want to thank you for your time today, for sharing your stories, and for the great work that you and your wife are doing in trying to educate everyone towards financial freedom. And you and I share the same passion for dividends. So I had an awesome time talking to you about that. So thank you for being on our podcast today.
Thank you so much, and I'd love to get started investing in the Canadian market. So I'll look for your guidance there because I've been seeing some finance YouTubers in Canada. So I've been watching the content. I'm just not very familiar with the companies there. So hopefully we can make some time to talk about that.
Awesome. That sounds good. Thank you, Jermaine. Bye-bye.